Welcome back. I'm Joe Elkier, here with Tim Murphy. This is the Gold Spot. Tim, again, metals are on the move. Lots of excitement around the metals market. From our side, what we're hearing, we look around the world and things continue to escalate really across every front, financial, geopolitical, all these different things. One of the main questions that we see, especially with prices being elevated, but this topic comes up quite a bit about price suppression in the metals market. Can you explain into that what we mean when we say that? Just give us a little deeper look at it.
Sure, Joe. Throughout history, prices get suppressed, and now in today's day and age, the government they can suppress anything they want to a certain point. And what's happening in the gold and silver, though, is J.P. Morgan, among other banks, have been keeping the prices down. They do it because they make a lot of money in the process, and they do it in the New York Exchange, the London Exchange, and so the prices, gold and silver prices, really haven't moved in the last 3 years. And people, the public, they're wondering, what the heck? How come gold and silver aren't going up? But what's important to know is this suppression of the prices, keeping the price down. A lot of more supply has come out of the market. The countries all over the world are taking the silver and gold supplies out. Demand for gold is through the roof, right, and the central banks leading the way. So you've got less supplies and you've got more demand, and ultimately that's going to mean much higher prices. And you have to have a certain amount of physical supply in order to suppress the market. It's complicated, but we're at a point right now where supplies are just simply running out and demand is very strong, and that's going to result in much higher prices very soon.
So when you say supplies are getting thin, is that you mean in the bullion banks, COMEX, Shanghai?
Yeah, Joe, it's the actual physical metal that these countries they're purchasing, the real stuff, the gold and silver. They're just taking it out of the inventories, worldwide inventories, and they're just sucking it in. Last month, India imported 60 million ounces of silver, and the world in its entirety only produced 70 million ounces. So there's not much silver, left out there for the rest of the world, and it's like this every month, month after month. The demand for the physical, by the people who know, the central banks, the big countries, the most well-informed, well-funded entities are buying gold and silver into the public is on the sidelines right now, and right now they're going to be missing out on something really big.
Yeah, the speculation, a lot of experts are speculating all-time highs into the end of the year. With the way things are playing out, it's very possible, especially what we as investors and us little guys on this side, we don't want to get into a position of FOMO, fear of missing out. There will be a rush into markets. It's best we got a good window right now. It's a good time to really take a serious look at precious metals because we think they're going to continue to move higher, and the importance of them, more and more of the public is starting to realize it.
Yeah, and the last thing I'd like to say is that you have an opportunity right now. If you believe in your heart, if your instincts are telling you that we've got big problems and that gold and silver are going to go eventually, then you need to be in it right now. We've got Thanksgiving's right around the corner, so don't be a turkey. Don't miss out on this one because it's going to be a very big deal.
Buy gold and wait. Don't wait to buy gold. If you have questions, go to our website, give us a call. We're happy to help. We're happy to talk about this. Have a great Thanksgiving, and we'll see you next week.
If you enjoyed today's Gold Spot, like or subscribe to both our YouTube or our Rumble channels. Also, comment below if you have any questions or if you want to hear us talk about something specific in a future video.